Hey guys, Kristen texted me she's gonna be about 5 minutes late, but she'll be on in a few minutes. Hey guys, for those of you who just joined, Kristen's will be hopping on she's running just a few minutes late.
Thank you.
Actually, Alyssa, you're teaching the class. Go.
Me? I would die. Talk about something else. Talk about like fashion or something.
I don't know, you know your job pretty well, so I'm pretty sure people can do that.
Do a prelim class, an MFA class.
Yeah, if you want to get one on the schedule, let me know.
Yeah.
An upload class, Alyssa.
Huh?
An upload class. I'm working on that.
I don't do blocks. Always they just have some issues sometimes. It's not your fault.
Good. I'm like, oh my God. I'm working on it today. Oh,
Hi.
hi.
Sorry to keep you all waiting. Okay, so today we're going to talk about residential purchase agreement. If you can pull a copy of the RPA up, that'd be great. I'm going to start off by saying I really like an interactive class. So if you have the ability, if it's quiet where you're at and you have the ability to unmute yourself, your questions are welcome. I've been doing this a long time. I'll use acronyms. Correct me, because if you don't understand them, it's not working. Also, I am human and I make mistakes. So sometimes I'll say buyer or seller instead of the other. So if I do that, please feel free to interject and correct me so that I'm not confusing anyone. All right. With that being said, we'll go ahead and launch into RPA. I'm going to do a screen share now, unless anyone has any questions. Good. Okay. All right, guys. Here is the RPA. Can everyone see it? And is it large enough?
Yes.
Yes.
Yeah, that's fine.
Does it get bigger when I make it bigger?
No, it's fine.
Perfect.
Okay, great. The first document that accompanies the residential purchase agreement is the disclosure regarding real estate agency and relationship. Oh, my dog is here with me today. She says hello.
So cute.
So cute.
So anytime you have a contract, you're going to have this document, whether it's a purchase agreement, a listing agreement, or a lease listing or a lease agreement. And you'll notice underneath it says buyer's brokerage firm to buyer. So not all disclosure regarding real estate agency are the same. So you do have to make sure you're using the correct form, but you'll rarely have to do that because it auto-populates with our contracts. And it basically just identifies, yes?
I'm sorry, I have a question already. So before we can even get to this form, we have to create a transaction, correct?
I think there's a way to do it without, but you should make a dummy transaction. I always keep one. And the reason for that is because oftentimes you're going to need things like a one-off, like a referral agreement,
Right.
a counter offer. So I do have an example transaction. I don't know how to explain it otherwise, but yeah, that's what I do, is set up an example transaction in zip forms.
Okay.
Okay. So it goes over the seller's agent responsibilities, buyer agent responsibilities, and what an agent's responsibilities are in the case of dual representation. And so on that note, dual representation, guys, means anyone within the same brokerage, not the same agent. Okay. So very important to remember, dual agency is the same brokerage. All right, buyer and seller responsibilities, basically to act in good faith, you know, to treat time as if it's of the essence, you know, to do their due diligence and be honest, to hire legal professionals if advice in any non-real estate area is required or desired. Buyer signs, and this is every single time you write a contract for them. So we all know, unfortunately, in today's market, you might be writing multiple, you know, several offers in multiples before you might end up under contract. So every single time.
Quick question. So if you have a buyer and, you know, they don't get that house, do they need to fill out a new agency disclosure for like the next house, or can I just keep that same one?
It needs to be a new one with the date of the contract, and that's to protect you. Really, it establishes your agency relationship with the buyer. I mean, there's multiple reasons, but that's the most compelling reason for you to want to do it every single time. Okay, so this is a new document, Fair Housing and Discrimination Advisory, CAR Form FHDA, and that was added to our contract October 2020. And basically it goes over the fact that, you know, discrimination is prohibited by law. And the box here goes over the protected classes. I don't run into this often, but there is one I run into pretty often. And that is usually when I'm doing a lease. When I do a lease, a lot of times the property owner tells me they don't want children in, right? So when in doubt, you know, if you think someone's being discriminatory, they probably are, but you can check these boxes. And familial status is a protected class. And so how do I manage that situation? I manage that situation by letting my client know that I can't violate federal fair housing law, but that I'll be giving them an application with all of the information about that, the occupants that are applying, and that they don't need to give me any reason for indicating who they want to move forward with. In fact, I'd prefer that they didn't, if that makes any sense. If they do make that indication, I can't function as an agent legally in that transaction.
Wait, but could an owner provide you with like a rental policy sample, like of how they want to screen for?
Absolutely, as long as it doesn't violate any of. And also, if a landlord is going to have you use documentation or requirements, it needs to be in writing, and you probably need to have Michael Rosales review it. There are a lot of property owners who like to use their own lease contract. Again, you have to have Michael Rosales review that before you can be party to it. Why? You don't know what's in it, and it could contain things that would get you into trouble, such as discriminatory practices. Okay. Gosh, Alyssa, your hair is so gorgeous.
Thank you. I got a Dyson for Christmas. I love it.
You got what?
Have you seen the Dyson blow dryer?
Oh, my hairdresser had it. Yeah.
Oh my God, you have to get it. Changed my life.
Good to know.
I love it.
Yeah, it's fast, right?
Yeah, so fast. And there's no damage to your hair either.
Well, it looks great.
Thank you.
You're welcome. All right, so this will happen. I think it's also worth noting that CAR has recently issued messages to agents discouraging what we call love letters to the seller. And what that is when a buyer submits an offer, they'll submit a little letter to the seller telling them about themselves, flattering the owners and the home, and generally painting a fairy tale portrait of what they envision their future life to be there like if they were given the opportunity to purchase the home. Now, you know, is it allowed? Yes. Can it hurt you? It can. I always edit my buyers' letters. I do have them take a stab at writing it, but I do edit it. And you know, the whole purpose is to secure the property. If the letter contains any information that the seller, you know, has any kind of prejudice against, it's actually going to hurt you. At the same time, I don't necessarily know if I've ever felt or been aware of any discriminatory practices when I submitted buyer love letters, even with photos. But I do sort of edit the language, and I'll give you an example. I had a buyer who was really anti-development and was talking about their anti-development views and how they were going to restore the home to its former glory. That they were if they were given the opportunity to make the purchase. And I said, we should take that out because you don't know if this seller is a developer or her family are developers or anything else, right? And that's not even something that's a protected class. It's just something that could hurt us. So, you know, maybe I have a little bit too much faith in the world, but I don't feel like my buyer love letters have ever hurt my buyer's chances. I actually think quite the opposite. And it is true, you know, sellers do respond emotionally if financial and timeframes offered in the offers are similar. So I do think it's helpful, but you have to be careful with it. And you certainly, hey, stop. And you certainly want to be careful about what's in there. All right. Possible representation of more than one buyer or seller, disclosure and consent, Prbs. So this document is also auto-populated with the RPA package. It is just to cover you in the case that you have more than one buyer on the same property or buyer and seller. And that's not just you. This is referring to dual representation. So that's anyone within the brokerage. So this protects us if Tanya, you and I both had buyers that wrote on the same property. Like that. So that's why this is here. Again, read through this. I'm not going to go through this line by line. The RPA will more than fill up our class time today, but you should read through it and just know that it's required every time. All right. A little scary, but you know, it's definitely a conversation that is necessary to have with buyers, and I'm happy this is part of our RPA package, is the wire fraud and electronic funds transfer advisory. So somehow people committing fraud were finding out when an offer was accepted on a property. They were somehow gaining access to the buyer's contact information, particularly email, and they were posing as if they were escrow. And they were sending fraudulent wire instructions to buyer. Oh man, we've got a squeaky toy in the office. Give me a second. Come here, sweetheart. Come here. So they were posing as if they were escrow, sending fraudulent wiring instructions. The buyers were actually their funds to these fraudulent places. And it's almost impossible to get wire funds back. So do you think your transaction is going to go on if that happens? Absolutely not. So when I explain this document to my client, I let them know what's been happening and that we don't have to worry about that because I will make sure escrow sends the encrypted email that is legally required for them to send. So if an escrow officer is sending just a straight email with wire instructions, be wary of it. It doesn't mean there's anything wrong. A lot of agents and clients don't like the encrypted emails, and some escrow officers just send it regular. They're not supposed to, but they do. because clients complain. So how do you work around that? If you get a regular email, well, you pick up the phone. First, you do your own Google search to make sure you have, hey, come here, miss, come here. To make sure you have the right contact information independently. And then you call up the escrow company, ask for your escrow officer on a 3-way conference call with your buyer, introduce them. That personal touch is going to go a long way, and you verify the wire instructions together. Okay. All right. Here we are, residential purchase agreement. All right, so top left, date prepared. This is the date that you write the contract. It's not the date it's signed. It's not the date it's countered. It's not the date it's accepted. No contingency dates are calculated from it. It is literally only a legal reference date. You will need this date if you enter contract, if you enter escrow, because other documents, addendums and other documents throughout the transaction will say that in accordance with residential purchase agreement, whatever document it is you're working on, such and such, date prepared, and you'll have to say what date the purchase agreement was prepared. And if you don't understand that, if you wanted to look at an addendum in zip forms, no, please don't play with squeaky toy. Sorry guys. I know, come here, just stay here with mommy. Good girl. If you wanted to look at an addendum in zip forms, you will see what I'm talking about. At the top, it has several boxes and you can indicate what the addendum is attached to. One of them, I think probably the boilerplate one, would be the purchase agreement. And you'll see what I'm talking about with it, where it asked for this date here. All right, 1A, this is an offer from blank. This is the buyer's name. So guys, couple of things. You have 2 options for buyer's name, an entity or a natural person. Our example here has natural people, and we don't know their relationship. We don't know if they're married or brother and sister. And does it matter? No, because all clients need to be listed with their full name on here. So if we knew that John and Janet Jones were husband and wife, you can't say Mr. and Mrs. John Jones. You don't say John and Janet Jones. It needs to say John Jones, comma, Janet Jones. And so when you fill in this blank here, you'll see several lines, buyer 1, buyer 2. So you don't have to worry about the commas. It'll automatically insert those for you. Just make sure you enter the buyer names on different lines. So your second option is an entity, not a natural person. Those are LLCs, corporations, trusts, you know, anything like that. If you're going to make an offer in the name of an entity, if your buyer has a loan, you'll want to check with the lender to make sure that's okay. A lot of lenders will not make loans to entities. That's fine though. They'll make it to the natural person, and after escrow closes, they will do a transfer deed into the name of the entity that the buyer wants, now owner wants their title held in. If another document you're going to need, if it's an entity, is called Representative Capacity Signature Disclosure Statement. I know that's long. You don't need to remember it. We're going to go over it at the end of the at the end of the document here. There's a checkbox that you check, and Carforms will auto-populate that document. There are 2 versions of it, one for buyer, one for seller. All right. Okay. Okay. Let me just take that squeaky toy away, and I'll be back. Hi, miss. Hi, miss. I'm sorry. I'm sorry. No, you can't have that.
Hey, Alfredo, looking good.
Okay. Go ahead, Doc. All right. So line 1B is for the property address. All right. Can anyone tell me where you should get the property address?
Title or MLS?
Title?
Title. Yeah, you can take it from the MLS if you need to. I prefer that you get it from title if you can. And the reason for that is the legal city. Each city has different transfer requirements. I'll use the city of Los Angeles, for example. We have a 9A building report and a certificate of compliance that are required. Certificate of compliance has to do with retrofitting. Retrofitting is a very broad term. It's like low flow water devices, carbon monoxide detectors, automatic gas shutoff valves, things like that, water heater strapping. And so the state has requirements, but then city can have additional requirements, and every city does have either nothing or their own version of additional requirements. And the reason that the legal city is so important is that if you have an inexperienced agent on the other side, or an inexperienced escrow officer, or someone who just misses something, if it, you know, it may be because they look at the city and they're like, oh, it's not LA, so I'm good. And that might cause you a problem. Why? Well, because we have a gigantic city full of what we call areas. And these areas, a lot of people think that they are their legal city names. So I'll give you some examples. Venice is city of Los Angeles. Sherman Oaks is Los Angeles. North Hollywood is Los Angeles. Encino is Los Angeles. Hollywood is Los Angeles. West Hollywood is its own city. Santa Monica is its own city. Culver City is its own city. Brentwood is not, is actually a legal city in Northern California. It's city of Los Angeles.
Beverly Hills is its own city too, right?
Yeah.
All right.
Yes, and Beverly Hills has its own retrofitting requirements. And I've only done a few sales in Beverly Hills each year. I'm not super familiar with it, but we have escrow officers for that, and we have retrofitting companies. So if you're ever in doubt as to what's required for city transfer, your two questions would be, is there a building report, and is there any retrofitting requirement beyond the state requirement? Best person to ask for that, escrow or retrofitting company. A lot of retrofitting companies actually have a list of what city requires what on their website, but if you're getting out of area, they won't necessarily. Metro Retro, I believe, has one on their website. So that's a good resource. But an experienced escrow officer like Pele in our office, or any other experienced escrow officer will know the answer to that. So if you're working out of area, what's a great way to find out? Because like I said, there are little nuances to each area, even outside of retrofitting and building reports, is to pick up the phone and call a KW office in that area and ask if they have in-house escrow. Ask that escrow officer there. Okay. So legal city, county, zip code. Okay, one of the most commonly missed spots in the contract that I see is the APN number, the assessor's parcel number. This is very important. It is actually a stronger identification of a property to title and the county recorder's office than the actual address is. So it's very important that your APN number is not only there, but correct. Okay. I recently had an escrow where I was a listing agent, and the buyer's agent made a mistake here. No one caught it until the end, and we had to do an addendum at the end. I think the lender caught it, or maybe title caught it. So even as a listing agent, you want to check it. You can always fix it with an addendum or an amendment, but you know, it's great if not. I could have had a delayed escrow if escrow or title hadn't caught it. All right, purchase price. Guys, who decides what the purchase price is?
Seller.
How they wish.
Buyer.
Buyer.
Yeah, the buyer. Oh man, we'd have a very different market if a seller decided what our prices were. Never be able to buy a home, never. Yeah, so I can lead a horse to water, but I can't make them drink. I can pull comps for a buyer all day long and make recommendations. I can tell them there are 15 offers, already $50,000 over asking, but I have to write what they want. So just so you guys know, I don't think I heard this until years into my career, is that you have a duty of obedience to your clients. So guess what? Even 20 years later, I write a lot of embarrassing offers, but that's okay. It's part of the process. You know, my buyers may not listen to me the first or second time, but generally, at least by the third time, they're taking my advice. All right, section D, close of escrow. So you have two options here. Shall occur on blank date, which is a finite date, or blank days after acceptance, a time frame. All right. And so the first option is not commonly used. Any idea why the first option might be problematic?
There could be errors like that, like the APN number, or?
No, it's actually because of the offer and potential counter offer process. So if I wrote an offer today on the 7th and I said escrow was to close on February 7th, well, you know, my counter offer process, I have no control over. That could take a week, it could take 2. Sometimes you get a straight acceptance. More often than not in a competitive market, you're getting a counter offer. Sometimes you're getting 1, but you know, I have deals where I have 6 or 7 sometimes. Which can take weeks. So just be careful if you use this finite date. There are some rare instances where I do actually use it, and that might be when I know the offer is going to get accepted and my buyers want a specific date for some reason. Generally speaking, that's a far off date or a little bit longer than 30 days. And I'll give you 2 examples. You know, maybe you have someone relocating from another state, maybe their company's relocating them, and you know, they need a 60-day escrow, but it has to be an exact date. So, you know, as I'm getting closer to the finish line, if I know I'm going to get a straight acceptance, like I'm talking with the listing agent, I know it, I might put a finite date in there and I'd explain why it's important. I've used this example before. I had a buyer where we were writing a 30-day escrow, but it was August of 2018. I think our close date was going to be like the 5th or the 6th. My clients were Taiwanese and they like 8s. I guess it's good luck or resembles a character they like in their written language. So they asked if we could close on the 8/8/2018. So I asked the listing agent, he said, no problem. And we wrote 8/8/18. But I knew the offer was going to get accepted. The second option, much more common, is blank days after acceptance. Guys, what's the common time frame here?
What's the question?
The common time frame for an escrow.
30 days, right?
30 days, but right now it's like 40, right?
30 to 45 is pretty
Yeah, I thought it
safe.
was 6 weeks.
No, I mean, the only reason it's more like 40, 45 now is because the rates are so low that loans are backed up, lenders are backed up. And so buyers can't really perform honestly within the 30-day time frame. So, you know, regular market, 30 days, lack of inventory, buyer multiples, and lender backup, it's more like 45 now. But that doesn't mean you should write 45 in. Can you check with your buyer's lender? You should always check with your buyer's lender to see how quickly they can close. And obviously making a shorter escrow period is going to be more attractive to a seller, which gives you better odds for having your buyer offer accepted. Okay. All right. Moving on to agency.
Christen.
All right. Yes.
Yeah, one question. What is the shortest time frame would be?
With a loan or without a loan?
With a loan.
With a loan, probably 30 in this market, but that would be a question you can ask your buyer's lender or mortgage broker.
Okay, and with a cash one?
Depends on the city. Probably 10 days, but you might need up to 14. So I'll tell you why. If it's a cash deal in a city that doesn't have a certificate of compliance or a building report, that's usually the holdup. As long as escrow and title are on it, you can get it done. But someplace like in the city of LA, if the listing agent didn't order the building report prior to opening escrow, it might take 2 weeks for you to get it, and you cannot close without it. So if you have a listing, guys, be a good listing agent, order your 9A building report for city of LA ahead of time. Building reports do expire, so don't do it with every city, but city of LA, probably want to have it ordered ahead of time. How do you do that? Ask for the escrow officer's help. As a listing agent, you generally get to choose escrow. So, you know, ask an escrow officer for the building report application to help you order it.
I have a quick question.
Sure.
When you were talking about using the finite date, that you use it very rarely, is that with a cash offer or with a loan, or both?
Both, because both could have counter offers.
Oh, okay, perfect.
Yeah. It's all about not being able to control the time. If I burn up 2 weeks of time on a 30-day, you know, estimation I put here, then I only have 2 weeks to do what I anticipate will take 30 days, if that makes any sense.
Yeah, that makes sense. Thank you.
You're welcome. All right. Agency. disclosure is already checked because like I said, it auto populates with the RPA package. B, here's going to be the listing brokerage and the listing brokerage's DRE, and then the listing agent and the listing agent's DRE. So there's some confusing terminology that I stay away from in real estate. Escrow uses it pretty often. Guys, did you guys know that the selling agent means a listing agent? Very confusing, right?
Yeah.
So I always say seller's agent or buyer's agent, SA and LA. And if someone says seller's agent, I just want you to keep in mind, they can be referring to either the buyer's agent or the listing agent. You need to confirm that. It's just a very confusing terminology. So when someone says selling agent, just be very careful with that and double check it. Buyer's brokerage firm, if you are writing this offer, that's going to be Keller Williams Beverly Hills. This is our DRE number. So if you don't have it, you should write it down so that you have it easily. And then your name and or your co-agent if you have any, and any and all DRE numbers for the agents. So if you can't find any of these numbers, can anyone tell me where you can find them? No? Okay, so the California Department of Real Estate, if you go there, there's a box for consumers, and then you can check a license. And you would type your name in, last name, comma, first name, or the other agent's name, whoever you're trying to find it for. And it will pop up with that DRE number, but it will also say employing broker and have the employing broker's DRE number. Austin, are you hiking?
Yeah, I'm on Mount Olympus. It's a great place. There are a bunch of nice houses. You meet a lot of cool people, say hello to everybody, and eventually you just sell their house. I don't know if that counts.
I love that.
No, actually, I walk up here twice a night, and I've actually been meeting a bunch of really cool housewives.
Uh-oh.
Yeah, they're nice. What?
All right. Back
Yeah,
on
I'll
the-
get off. I'll get off.
Oh my God, I love this.
All right. C, potentially competing buyers and sellers. We've already talked about the Prbs, which is the possible representation of more than one buyer and seller. So this will always be checked. 3, finance terms. Arguably one of the most important parts of any offer, the money part. A, initial deposit. Can anyone tell me what percentage our industry standard deposit is?
3%.
Yes. Can we do more or less?
Yes.
Yeah. Less looks weaker. More looks a little stronger. What I want you to keep in mind is that this initial deposit amount is the maximum amount of money that a seller can ever try to go after if your buyer lifts every single contingency but fails to close. Okay. Doesn't mean that that will happen, but it's a possibility.
You kind of repeat that one more time. It's
Yeah.
The max amount that the seller can go after. What was after that?
The maximum amount of money that the seller can ever try to take in the case that the buyer lifts all their contingencies but fails to close.
Okay.
Okay, that's only after lifting all the contingencies out, and we do not have a passive contingency removal in the state of California. A buyer has to sign those away.
Okay.
Now, was that 3% or 20%?
3%.
3, okay.
Give me a second, guys. Stop it. Okay, sorry about that. 3% is the initial deposit. Now, someone mentioned 20%. 3% is of the total down payment. Okay, so I'm going to do a little simple math here. Let's say that a home was $1 million. The loan amount is generally based on a percentage, and that can be anywhere, from low percent to generally maximum 90%. But the most common percent for a loan is 80%. So if you have $1 million home and you have an 80% loan, you're going to have an $800,000 loan amount, 200,000 down for your total deposit. But out of that deposit, you're going to take the 3% portion. So if we have a 20% down payment, we're putting 3% here under balance of down payment. You're going to calculate for 17%, if that makes any sense. If you're doing 30% down, you're going to calculate for 27% down here if you've done.
Got it.
So you just split it on one line? You do the 3% on the top and then the remaining on the bottom? Okay.
Yeah. And that's because, like I said, the initial deposit is what is up for grabs in the case that a buyer lifts all their contingencies but fails to close, right? We don't want the whole 20% on line 3A. I do see that mistake often, and it is not a good thing. I mean, what if, what if the buyer was attached to a completely unprofessional lender that just strung them along and they failed to close? They told the buyer everything was okay, and then it wasn't. So, and there are times that a buyer does decide to cancel a deal for reasons outside of the contract, and they do negotiate partial or full surrender of this deposit amount. I'll give you 2 examples. One, I had a woman who had lifted all of her contingencies. She couldn't, the property, I was providing dual representation. The property that I sold to her was at the basin of a really tall hill, and she couldn't get landslide insurance. I don't even know if there's such a thing. And she decided she wasn't comfortable. And then another one, someone broke into the listing right before we closed. The buyer decided they didn't want to buy it. They didn't per se have any grounds to do that. They negotiated giving part of their deposit over. But yeah, the seller can go after whatever is in the initial deposit. And there is a very important reason that you need to know that. By the way, guys, the initial deposit, it goes directly to the escrow holder via wire transfer. Escrow companies do not accept cashier's checks, nor do they accept personal checks. They don't accept, what's the other kind of electronic transfer? I forget what it's called.
Wire?
No, banks have 2 types of electronic transfer. It has to be a wire.
Okay.
That's what you need to know about it. The other thing that's special about the deposit is, this is the way the contract is written, is that the deposit has to be delivered to escrow within 3 business days of acceptance. This is the only contingency in our purchase contract that is based on business and not calendar days. Why is that, guys? Come on, you go.
Maybe because of the banks.
You got 'em.
They only work during business days.
Yeah, they have to be open for a buyer to send the money.
Mm-hmm.
Exactly. Okay. So option 3A2 is never going to be used. We don't do this anymore. Back in the day, like when I first started, we used to actually take physical checks from buyers. We would log it into our broker account at our brokerage, and then we would write a check from our brokerage to the seller and present it with the offer, physically present a check with the offer. Thank God we don't have to do that. That whole broker account stuff was ridiculous.
So I could pretty much cross off to 3A2. Correct?
Well, you're not going to cross it off, but you should never be using it.
Right.
Yeah. 3B, increased deposit. Okay, we talked about the initial deposit. Increased deposit is optional. It is rarely used. I just want you to know what it means. So an increased deposit might be used to make a buyer offer more attractive, or to, make the seller feel comfortable maybe with a very long escrow period, like a 60+ day escrow. And what is interesting about the increased deposit is, unlike the initial deposit, this money is not necessarily up for grabs by the seller if the buyer lifts all their contingencies and fails to close. That depends on whether or not car form RID is included with the offer. So if I am writing an increased deposit for my buyer, I probably do not want to include car form RID. Including it means that that money is up for grabs by the seller in the case the buyer lifts their contingencies and fails to close. But most agents don't know that and they don't read. So I just basically made my buyer's offer stronger without putting any more of their money at risk. If they're really serious, I have no problem providing RID. And I certainly don't want to bluff and get caught by the listing agent, because if they ask me for the RID and then I don't give it to them because the buyer's not comfortable, our offer doesn't look very strong, right? So I just want you to be aware, if anyone ever submits an offer to you with an increased deposit, you want to make sure you have car form RID or it's pretty worthless. All right. Section C is for an all cash offer. I don't get to see that many of these. I wish there were more. Cash offer is much easier. The loan process is very arduous. And I mean, once you enter escrow after inspections, most of your job as agent is going to be babysitting the lender. It's making sure they get stuff done on time. All right. D, loan, first loan. So like I said, most purchases are going to be made with a loan. And let's use that same example. If the property is $1 million and we're doing an 80% loan, you're going to write $800,000 here. But where do you get that information about how much needs to be put down? From
Just
buyer?
math subtraction.
No, you need to get it from the buyer's lender based on their purchase price or what's going on, because rates do change every single day based on what's going on, or their purchase price, or if it's a condo and HOA dues are a factor. Lenders look at HOA dues in some weird way. They exponentially decrease the amount a lender will loan to a buyer. I don't know why. So you want to check with the buyer's lender every single time that you write an offer. So you'll write in that loan amount, and it's okay if it changes during the course of escrow. It almost always does. At the end, escrow will do something internally called the lender rate and term amendment that you'll probably never see. You'll probably forget that I ever told you about it because you'll probably never see it. It is pretty common for a loan amount to change during the course of escrow. Remember, you have credit, possible price reductions, and a whole lot of other stuff that goes on during it. All right. D2, second loan. Sometimes a buyer is going to purchase with not one, but two loans. And you fill them out exactly the same way. So what you need to do is you need to indicate if you're going to leave it alone, that this loan is at a fixed rate. Okay, so that's the way our document is written. Not to exceed blank percent. Where do you get the maximum percentage of what the buyer's rate is going to be? Buyer's lender or mortgage broker. A lot of agents leave this blank. That is a big mistake, because the way our contract is written is that a buyer is bound to make a purchase as long as they qualify for a loan under this percentage. Will you get out of it otherwise? I mean, will you get out of it even if you left this blank? Yes, but you wouldn't be being completely honest. So I get that information from my buyer's lender or mortgage broker. I do put that in there. I explain to my buyer that it might be a little higher than what their lender told them. So if their lender quoted them, 2.75, I might write 3 in there, something like that. And this doesn't bind them into getting the loan with the lender. It's not an agreement with the lender. It doesn't bind them in at that percentage. What it simply does, it says, buyer reserves the right to not move forward with this transaction if they can't qualify for a loan this percentage or lower. So if you write too low in here, you might get a counter offer from a listing agent saying, that's not really realistic. So if I wrote 2% in here, I might get a counter offer back from a listing agent that said something like 2.75 or 3, I don't know. The other type of loan there is an adjustable rate mortgage. So if you have an adjustable rate, the buyer is buying with an adjustable rate, you're going to check this box. They're not very common right now. They may become more common. They generally come in and out of style. They were very, very in right before our real estate crash. So if you ever see adjustable rate loans become popular, probably want to start saving your money. Just a little tip from me to you. Let's see. Regardless of the type of loan, buyer shall pay points not to exceed blank % of the loan amount. Do you know what a point is? A point is a fee the lender is charging a buyer to buy their interest rate down. It's optional. They don't usually do it, but you can never assume. So you're going to ask the buyer's mortgage broker or lender if there are any points to be written in. Okay. FHA or VA. All right, so these are very specific types of loans with very different protocol. We do termite through the contract. We don't do that in a standard transaction. We oftentimes the appraiser will call out repairs that are necessary. The seller is oftentimes required to pay for things that the buyer traditionally pays for. So an FHA or VA loan, your buyer's lender is going to be your new best friend, and you're going to learn all about it with them. Myself, as an escrow officer, I've done both a few times, but as an agent, I've only done VA and I've done it twice. That's not true. I may have done FHA once. I don't even remember it though. They're so few and far between for me that I heavily rely on the buyer's lender. So make nice with them, ask them a lot of questions. You're going to need oversight and some extra help on this one. And anyone have any idea why FHA and VA loans are not so common in Los Angeles?
Maybe because of the price?
Exactly right. Exactly right. I think, but I can't remember that the maximum loan amount for at least VA is $750, but don't quote me on that. You can look it up online.
Sounds about right.
Yeah.
It's in the
And
sevens.
yeah, and if that is your maximum loan amount, you're not required to put that much down, if anything, for VA. You can, but you don't have to. You just have to come in with closing costs. That kind of limits your purchasing power, right? Now, I don't know about you, but there aren't many condos, let alone homes in the LA area that are under $750.
Why not?
True.
Hi, Michael. It's been a long time. You, Mahoney.
Oh, hello. Hi. How are you?
Good. I see your sign on Olympic every day when I drive home. I live
really?
right by there. Yeah.
Oh, nice.
So. Michael was one of our top 10 producers, I think, this last month, right?
Well, yes, I had a pretty good month. Yes, thank you very much. Yes.
Am I embarrassing you? I'm sorry.
Try to get a little bit. Try to keep it going. Did my faces get red?
Sorry.
Yeah, we'll try to keep the momentum going. That's why I'm here.
Good. Good.
Yeah.
Congratulations. That's amazing.
Pardon?
You got it. Congratulations. That's amazing.
Oh, thank you so much. Thank you.
All right. Additional financing terms. All right, guys. So on a rare occasion, you're going to have a buyer who has the option of buying with a loan or all cash. This often happens with developers or flippers, and a lot of times really high net worth individuals. So they're not sure if they want to purchase all cash or if they want to purchase with a loan, or they want the strength of what appears to be a cash offer with the option to obtain a loan. Key point about this is that this option does not afford the buyer contingency protection for their loan approval and funding. Okay, so if your buyer wants to do it that way, under E, it's my favorite place to enter it. I use the terminology, and I'll type it in the chat box for you if I can find the chat. Yeah, I got it. Is buyer reserves the right to obtain contingency-free financing. Keywords. Oh, I didn't type. Buyer reserves the right to obtain contingency-free financing. Can you guys hear my nails on my keyboard?
Yes, but that's fine. We're used to it.
Okay, you guys got that in the chat?
Yep. Thank you.
You will use that, you're welcome, at some point in your career, so you might want to keep the language. Oh, I forgot part of it. Sorry. At their sole discretion. Buyer reserves the right to obtain contingency-free financing at their sole discretion, and the keywords are contingency-free. Okay.
Can you explain when that would be necessary or when you would type that in?
It would be typically used when the buyer has the ability to make the purchase all cash, but doesn't want to, but still wants to show their strength to get their offer accepted, possibly at a better price, by writing it in that way. Basically, it's optional financing, but without contingency protection. So it really is, I mean, for all intents and purposes, almost as strong as a cash offer in a seller's eyes or a listing.
Okay. Okay, thank you.
You're welcome. All right. Where am I? Am I just scrolling down? Yeah, I'm just scrolling through. Sorry about that. Okay. So F, balance of down payment or purchase price. Remember, I told you this is whatever the total down payment is minus the initial deposit. Okay. So if we have $1 million sale, we have an 80% loan, we have 20% down. That means 200,000 is our total down, but we've already put 60,000 down because we have 3% earnest money deposit entered here on line 3A. So if 200,000 is our total down, 60,000 is our initial deposit. That means $140,000 is going to go into section F. And then G, purchase price total. This should always add up to what your offer price is. This is always your check and balance. Is this number right? And if it is not, go back and check your numbers, fix it up. I oftentimes add a 0 or omit a 0. So this is always my check. It's very embarrassing when you send an offer over for buyer's signature that's missing a 0. Can you tell it's happened to me before? All right. Page 2. Verification of down payment and closing costs. Oh, you know what? I'm going to go back up to cash offer real quick. So all cash offer, I want you to see that in capital letters, it says that verification of funds to close this transaction is attached to this offer. Okay, so a cash offer automatically indicates that proof of funds is attached for the full purchase price and closing costs. If you have a loan, in our market at least, we expect the same. Verification of the total down payment and closing costs to be included. So because you don't know what the closing costs are going to be, and by the way, most agents don't know this and aren't going to enforce this, but I want you to know so that you're a fully educated agent. Generally speaking, a buyer with a loan, their closing costs are between 1.5 to 2%. Without a loan, 1 to 1.5%. And that is of the purchase price. And this is just a rule of thumb, kind of general estimation, right? So if we have a $2 million purchase price, or sorry, 1 million, that was our example. I'm going to estimate high, and I'm going to say, my buyer with a loan, I'm going to say it's going to be 2% of that purchase price. So on top of the 200,000 down, we're going to have, oh, you can't see that. We're going to have $20,000 potentially on the high end in closing costs. So I'm asking my buyer for a proof of funds to be submitted with my offer in the amount of $220,000. Does that make sense, guys? And you as a listing agent really want to see that.
Can you just go over once again the percentages with a loan and without a loan?
Yeah. And remember, I'm estimating high. These are rules of thumb. There are always deviations. Okay. But generally speaking, with a loan, 1.5 to 2%. Without a loan, 1 to 1.5. This is for the buyer. Seller's costs are completely different.
Okay.
Okay. All right. So I never want to know about any of you who ever take a class with me who have submitted an offer without proof of funds attached. Why? That offer is worthless. It's a little embarrassing. I do on occasion get buyers who don't want to give me proof of funds. They say they will give it when the offer is accepted. And I say, well, no listing agent and seller is going to accept your offer unless you can prove that you can pay for the home. Mm-hmm. Mm-hmm.
Makes sense.
So now that's a discussion I have at the time we talk about making an offer, if not sooner. During COVID, showing our new regulations for showing, a lot of sellers are actually asking for proof of funds before you can set up a showing. So that's a little helpful for you as a buyer's agent, so you don't have fake buyers wasting your time.
I ran into that a couple times.
Yeah.
Do you
Is
find that
that a requirement before you even show them anything, period?
No,
Not always.
I generally don't make it a requirement. Why? I want to secure the relationship with the buyer before I go scaring them, asking them for their, private financial information. But, and honestly, when I was starting out in the business, I was so hungry. I didn't care. I'm happy to go for a long shot. I'm not the same way anymore. Have that discussion, but I also feel like you spend enough time in this business and you just get a pretty good feel for it. No one's fooled me in quite some time.
Do you feel like when people are so easy to give you the proof of funds are more serious about purchasing versus them being hesitant about it at first?
Some of them, it's just a cultural difference. Finances are not, like high context culture is very veiled about their finances. Low context culture is generally more likely to just say, here you go, I don't care. And it's just cultural differences. And then it's a personal difference, right? People are funny creatures. Sometimes some of the, like the most wealthy man I've ever worked with looked like a homeless man. People are funny.
I'm asking also because it's like to get them to sign that buyer's agreement.
I don't do that.
You don't do that?
Never do it. I think it's tacky, but it's again a personal preference. I know KW pushes it, and I'm not going to say it, you shouldn't do it, but I don't feel the need to contractually bind a buyer into working with me. If they don't want to work with me, they shouldn't. And if I don't trust them, I don't want to work with them.
Can you give if and when you find the time is right, can you please give us tips on when to be able to figure out that type of person where you feel like you can trust them when you're talking about it versus when you're not, and when you're getting to know them?
No, I don't know what kind of tip I could give. It's just kind of a gut thing. Just like, do you trust or like someone that you meet when you talk to them? You know what I mean? I mean, a BSer is a BSer is a BSer, right?
Right.
If they're going to BS you in a real estate transaction, you can tell when people are weird, but doesn't mean weird people don't buy homes. And I'd rather do some free work than miss out on my paid work, if that makes any sense.
Yes.
So, but as far as someone who's going to go behind my back and take a property I brought to them and bring in another agent, I don't know. It's a risk that I'm willing to take. But if I truly don't trust someone, I won't work with them. I'll refer them out to someone else.
Okay.
Yeah, but a BRE, I think, is a scary thing. It contractually binds a buyer into working with exclusively you for a certain amount of time. In my professional experience, I found that only really shitty agents use that and contractually bind a buyer into working with only them, and they're not really doing their job.
Okay.
And that buyer is stuck, and they certainly aren't going to have a very good or experience or high opinion of real estate agents afterwards. The last buyer consult, like former buyer consult I did, the buyers asked me about that. And that was my answer. And I think that's why they chose to work with me is I said to them, I'm really confident in the work that I'm going to do for you. And honestly, if you don't want to work with me, if you don't think I'm doing as good of a job as can be done for you, with my blessing, you should work with someone else. Like I don't want to contractually bind you into being stuck with me if you're not happy with the service I provide.
Right. And you might not be vibing with the client either. So that could.
Oh man, I work with a lot of clients I don't vibe with.
I don't know what other words to say, but someone that you might not want to work with, I guess I want to say.
I work with a lot of those. It's more of a, do I think that they're actually going to, do I think that they're going to betray me and take work I've done for them and go work with a different agent? Believe me, I work with tons of clients I really don't like. The
Okay.
ones I like make up for it. There's nothing better than putting that client in a home that you absolutely adore and getting what they want for them and them being so happy. But yeah, don't for a second think you can be a chooser as far as what your clients are going to be like. And also remember, this is one of the most important financial decisions as a purchase or a sale that a person ever makes. And even the most level-headed, reasonable, kind person can get a little crazy when a lot of involved and a lot of stress is involved. I think you'll find with your friends and family, those are generally the hardest deals.
Oh, yes.
The people you're closest to, because they don't have that filter of, oh, I can't be crazy with her.
I think they goes out the window.
What's that?
That filter probably goes out the window, right?
Yeah, I mean, a lot of like that. I love working with strangers because they don't feel comfortable enough to get crazy. Yeah. Oh yeah, and don't ever sell a house to anyone you date. Really, I guess you can. They'll drive you nuts.
Anyone you date?
Oh yeah. I had a great guy when I was younger, and I definitely broke up with him before the deal closed.
Oh.
Yeah. I was like, do not ask me another question when I'm trying to rest. I told you this was a bad idea. No. But you can close it. Just be prepared to be annoyed. Yeah, the better someone knows you, the more likely they are to annoy you and be crazy. And then you're just gonna have bad people too. It happens. And once you write a contract, you are contractually bound to perform for that client.
Mm-hmm.
I'll give you an example. And remember, I told you we have a duty of obedience.
Mm-hmm.
I had a client, a buyer, who went through the entire escrow, lifted all their contingencies, and then just came to me and said, Christen, you're so good at your job. Just go get me $5,000 credit. And I was like, I can't. You have no contingencies. We've already done our inspections. What am I asking for $5,000 for? I don't know, but I'm not buying it unless you get me $5,000 more.
Oh my God.
And I'm like, you could lose your deposit if you don't close it. And I was like, well, give me something that I can ask for credit for. Right? This totally goes against my ethics and me as a person, but I have a duty of obedience and I can't bow out of a transaction once I'm in it. If you ever have a truly terrible client, you can flip them over to Michael Rosales. I've done that once.
Okay.
Sexually harassing me. And so I flipped him over to Michael Rosales.
Good save. So
Yeah.
what did you end up finding that they could get $5,000 worth of credit? Or what did they end up finding that they can get?
Without going into specifics, he gave me basically a worthless report from a worthless contractor that was like a family friend or a family member of his.
Got it.
Listing agent. Guess what? That idiot gave it to us. I was so mad. I wish she said no.
Wow.
Yeah, I wish she said no. But he got it. So I'm sure the next time I work with him, he's going to be lovely. But I have to do things all the time that I don't want to do. What do I owe to the other side? A fair and honest transaction.
Fair and honest transaction.
Yeah.
Okay.
My buyer gave me this report. This is what he wants. Can we have it? That's fair and honest, right? That was pretty much all I could say and be fair and honest. And she said yes. Oh. Okay. Moving on.
Thank you.
You're welcome. Appraisal and loan. I and J are completely related. Can you have an appraisal contingency without a loan and vice versa? Yes. But in order to have loan approval, which you need to lift the loan contingency, there has to be an appraisal that appraises for purchase price or more, or the buyer has to bring in money, or the buyer and seller have to renegotiate the price. So one of them, the most common time frame for an appraisal contingency is between 14 and 17 days. But the lender is the one who orders the appraisal. So you want to check with the appraiser before you change this in any way. Okay. Do not change these dates, these time frames without checking with the buyer's lender. So if I talk to my buyer's lender and they say, yeah, Christen, you can go ahead and offer a 12-day appraisal contingency. I'm like, great. Separate question, what about loan contingency timeframe? Okay, so industry standard prior to rates being so low and the lenders being backed up was 17 days. So 17 to 21 has always been pretty common, is industry standard. 17 being generally the shortest time frame you can safely write a loan contingency in for. I want you to know that if I shorten this down to 17 days, I must shorten my appraisal contingency down, because I need the appraisal and I need it back, and I need it reviewed by the lender's independent appraisal review department, which takes a couple of days. Not to mention it takes the appraiser a day to get out there, maybe another day or two to do the report. Maybe it takes the listing agent a day or two to get them even in the property. So my appraisal contingency should be about 4 or 5 days shorter than my loan contingency. Okay. And that is because I cannot even get close to having formal loan approval without having the appraisal approved. Okay, so no, I'm not.
Is that another like a rule of thumb to kind of remember? You want to shorten you said the appraisal by 4 to 5 days?
You don't want to. If you can and it's safe and the lender tells you it's all right, it makes your buyer offer more attractive.
Okay.
Right now with lenders so backed up, it's very hard to do that. But you don't alter appraisal or loan contingency timeframes until you talk with the buyer's lender. Can you do a buyer offer with a loan with no loan contingency? Yeah. Can you do it without an appraisal contingency? Yep. Is it very safe? Not particularly. On a great occasion, maybe no loan contingency. Right now, with so many buyers out there and so little inventory, a lot of listing agents are countering back, asking us to lift appraisal contingencies. So can you do that? You can. You need to make sure your buyer is game. You need to talk to your buyer's lender, because they're going to have to order the appraisal ASAP, because you're going to have to get out under physical inspection contingency or something else if it doesn't appraise. Generally speaking, a listing agent only wants you to lift an appraisal contingency with the offer or counter offer if they're concerned it's not going to. So when they're asking you to do it is when you should be most concerned about doing it, if that makes any sense. Okay. I do teach a whole class on how to make your buyer offer more desirable, or how to get it accepted. And I talk a lot about this. So I'm going to stop talking about that right now, but I want you to know the relationship between appraisal and loan. Okay. And what the standard timeframes are: 14 to 17, 17 to 21. But that it's truly the buyer's lender who is the authority on who to ask for the exact dates on that. Okay. J4, no loan contingency. So this is where you would check the box, like I said, if you were trying to go for that option of a buyer offer with a loan, but no loan contingency. Come here. Sorry, guys. You want to say hi? This is Ronnie.
Hi, how are you?
Do you want to sit? You can wait in here if you want. Shh. Come on. Sorry, guys. I just saw Ronnie traipsing by my office over and over again, so I figured I'd invite him in. All right. Let's see. Lender limits on buyer credits. There's nothing you need to fill out in the contract on this, but I want you to be aware of it. Is that during a transaction, you might do physical inspections, and you guys, you and the listing agent might negotiate a credit to the buyer. I want you to know that lenders do limit the dollar amount in credits that a buyer can have. I just need you to be aware of that. You would ask them before you actually draft the paperwork for the credit. If it exceeds the amount, you can always reduce the purchase price as well, or a combination. So we can reduce purchase price, do a credit, or do a little bit of both. But I do want you to know that you can't just go and give, $100,000 credit from seller to buyer. It doesn't work like that, even if everyone's in agreement. The buyer's lender has to be on board with it. Okay. Buyer stated financing, we don't do that anymore. That's how the market crashed in 2007. That means that a buyer just tells the lender what it is they make and how much they can afford, and the lender just gives them a loan. No lender's going to do that. For sale of buyer's property. Okay, this is a little confusing, but if the buyer is making an offer, that is contingent upon them selling their home in order to make this purchase, meaning they have to sell a home to make this purchase they're making the offer on. It's referred to, even though we have so many contingencies in our contract, it's referred to as a contingent offer. So when someone says, oh yeah, but it was a contingent offer, they're talking about this. And a contingent offer, depending upon where the buyer is in the process of selling their home, it's not necessarily a bad thing. If I have a buyer that makes a contingent offer that's already under escrow, their buyers lifted all the contingencies on their deal and they're a week away from close, I feel pretty confident about that buyer closing that deal and being able to purchase my listing. So, but some, a buyer who's making an offer that just put their home on the market or hasn't even done that yet, I am it's their ability to make a purchase might not happen at all, or it might not happen for a very, very long time. So that's not a very strong looking offer to me. But if I had to make a buyer offer that was contingent, I'd check this box. Car form COP would auto populate. I wouldn't be surprised if CAR didn't redraft. You don't have to sit here if you don't want to. Okay. I wouldn't be surprised if California Association of Realtors didn't redraft this document COP because it is really, really confusing. It is hard. When I fill it out, I hate my life. I read it 20 times and it's super important because it's all of these like domino effect terms that affect terms in your contract. So you need to have your contract out, the COP out, because if you write one error in there, it could cause a cancellation, a loss of deposit, a loss of, the escrow. So car form COP, make sure you're careful, make sure you know how to explain it to your client. So if you have a mentor, definitely want to look at this. Like I said, I have a hard time with it myself. It's not very common in our market right now. As it becomes more common, which it probably will in the next couple of years, I guarantee you they will make revisions to this document because it's hard and confusing. So I hope you don't have to fill it out anytime soon. Oh, I'm sorry. I shouldn't have said that, right? Tanya, you okay with COP? Yeah.
Thank you.
You're welcome. Section 5, addenda and advisories. All right, this box here, buyer's inspection advisory, is always going to be checked. If you have an addendum you want to attach, you're going to check this box here. If you're submitting a backup offer and not an offer, you're going to check this box here. Most commonly, what we have in here is generally a trust advisory. Sellers oftentimes hold title to the property they own in trust. So if your seller's name is a trust, you're going to check this box and include car form TA. Okay. I see people, particularly in Keller Williams, make the mistake of checking this box for statewide buyer and seller advisory. It is a big 14-page long document of scary advisories on anything and everything that could possibly be inspected and or go wrong. It is not customary to make it part of the contract. It's part of the disclosures, and I would leave it as part of the disclosures. Would it mess up your transaction if you included it in the contract? Not per se, but escrow and title and the lender are not used to seeing that as part of an attachment to the contract. If you check this box, it is literally part of the contract. If they fail to forward it on with the customary portion of the contract, your deal could be delayed. So do me a favor, don't include SBSA. Okay. 6, other terms. This is just free form in case you need to write anything that's not covered in our contract. I generally advise you to go through the entire contract before you use free form spaces. Our contracts are pretty well written. There's possibly, very likely, a very good place for whatever it is you think you might want to write in under other terms. And the other thing is I want you to be very, very careful when you use free form spaces in contract, because particularly before your experience, even if you're clear about what you want, you may not have the full picture on the other things it affects. And so whatever you're writing in may not be complete. and ambiguity in a contract, things that need to be negotiated that are not negotiated at the time of an acceptance, can cause big problems during the course of an escrow. So if you're ever going to use other terms, I highly recommend, I even do it, having another agent look at it. Does this make sense? Does this cover everything? Is there a better way to word this?
What would be like an example you would say that, is, miscommunicative, or that's allowable, I guess, or that everybody would understand?
It could be absolutely anything. Let's see. I don't know. Let's say I wanted the seller to agree to a pre-negotiated credit. Otherwise, we didn't want the property at all. Like, it was a term of the contract. So under other terms, I would say offer is subject to seller agreeing to fixing blah, blah, blah with a licensed contractor per whatever, to whatever specification. Anything that's
Okay.
contract.
Okay.
Also, parts of the contract, I don't like the way they're written. So there's a section in here where I can say, oh, I want, when the seller moves out, I want them to remove all the nails and screws and patch it, but not paint it. Or they can leave all of them. Well, what if I want them removed, patched, and painted? I'd have to write that in under other terms, because that's not an option in our contract.
Okay, that makes sense. Thank you.
You're welcome. Allocation of costs. All right, so things are going to move a lot more quickly now, guys. Natural hazard zone disclosure report, 100% required by law in the state of California. You cannot waive it whatsoever. Seller pays for it. It's a seller disclosure. So prepared by should say seller's choice. I, as a buyer's agent, never want to take liability on myself by calling out the company, because it's a seller requirement. It's a seller disclosure. If I do it, liability is on me if there's an error in that report, because I chose the company. Okay. Just something to mention. I never want to see the word termite in your contracts, ever. All real estate transactions used to automatically have a termite report, and sellers were expected to do Section 1 work. We now keep it entirely out of the contract. It's an optional but necessary inspection every buyer should have. They pay for it themselves. It's like $99. And if they want work or a credit, you handle it in the request for repair process. Why? We hide it from the lender. Causes loan problems. I'll talk to you more about it during how to get your buyer offer accepted in multiples. Just want you to keep in mind, you ever see the word termite in a counter offer or offer, take it out. Ask the other agent to take it out if they put it in. You don't want that in there if there's a lender. B, government retrofit requirements and retrofit. We talked about this. This is some all-encompassing language all the way from section B1 to B2. The seller pays for these things typically. And it's just the same information reworded over and over again, because remember, I told you every city has different requirements. And so they just touched base on it over and over again with different language to make sure it was all inclusive. So seller, seller, seller. Escrow and title. This is the one and only spot for a cost in the contract where both boxes should be checked. So very, very rarely, unless you're working with a developer who's trying to buy off-market property or solicit off-market property, very rarely will it ever deviate from both boxes being checked. So both buyer and seller. And then I want you to use this exact language every single time. Is that each is to pay their own. Each to pay their own is customary. Escrow holder shall be. Who customarily chooses escrow?
The seller?
The lender?
Seller or listing agent, more likely listing agent. So what do we say here? Seller's choice. What, can we identify an escrow company we want? Yes, but you're very likely to get a counter offer out. And so in a very competitive market, I'm just looking for my buyer offer acceptance. So I always say seller's choice. Section C2 for title. There are two types of title policy. Well, there's more than that, but there's two common, and there's two covered in our contract, okay? So the seller typically pays for owner's title policy. If the buyer has a loan, there needs to be a lender's policy. And you'll see in the brackets here, there's not even an option. You don't even indicate, there's no deviation. It says buyer shall pay for title insurance, insuring buyer's lender. Okay, so you're going to check seller here. You're going to check, you're going to write in seller's choice here, unless you have some really good reason that you need to specify the title company. And just so you know, owner's title policy is named CLTA. Cat, Llama, Thomas, Apple. Wait, CLTA? Yeah. And the buyer's lender policy is called an ALTA. Apple, Llama, Thomas, Apple. Okay, other costs. All right, so county transfer tax. Seller typically pays that. City transfer tax. Seller almost always pays for that. Not all cities have transfer tax. When in doubt, check seller. The only example I can think of anywhere nearby is Redondo Beach. Usually buyer and seller split the city transfer tax. City of LA, seller typically pays, it's very high. Beverly Hills doesn't even have a city transfer tax. So they're all very different, but when in doubt, check seller. All right, section D3 through D7, this is all about HOA fees. You're gonna mark all of these seller. It is a seller's responsibility to pay for HOA documents. Okay. D10 is about the home warranty policy. So typically the seller pays for the first year of home warranty for the buyer. And this cost is calculated based on square footage and some other terms of the home. So it's better to overestimate here, but in all honesty, try not to guess this number. If at all possible, contact a home warranty policy rep, ask them for an estimate for what number to write in here. You know, I'll give you a little idea, but you can't hold me to it. Is generally speaking, a small single family or condominium is probably somewhere in the range of $500 to $650. A normal single family home is generally in the range of $650 to $1,000, depending upon the optional coverages. Something over 3,000 square feet or income property can be exponentially higher. So you definitely want to get these numbers from the home warranty rep. I do always check upgraded. And this is a place where I do choose a service provider. Why? This is for my buyer. I want to make sure my buyer gets a good company and a company with a rep that I'm familiar with, because if my buyer needs help, I need someone who knows me and cares about me because I give them business so that I can get my buyer help. Okay, if there's an air conditioner, I check air conditioner. If there's a pool or spa, I check pool or spa. And then no matter what, I always do check other, because every home warranty company has a bazillion types of coverages. I don't know what the buyer is going to want. So what I write in there is buyer to determine during the course of escrow. Buyer to determine during the course of escrow. And I write this in every single one of my contracts. It's in the chat box if you guys want it. Let's see. Where was I? I guess when I chat, it scrolls on the contract. Okay, so we just talked about home warranty. Okay, a buyer can waive a home warranty policy. It's one of my favorite ways to make a buyer offer look a little more attractive, but I don't often find it necessary. I just want you to know that it is a possibility. Make sure the buyer's okay with that. So legal definition of items included in sale are that anything that is permanently affixed is attached. Anything that's permanently affixed is included by legal definition. But things can get murky and buyers and sellers don't know that. So when in doubt, be very, very clear. If you're a listing agent, make sure that your client knows that all of those blinds need to stay, all of those light fixtures need to stay. No matter what is said in the MLS, what is told to a buyer or buyer's agent, if it is not in the contract, it does not stand. Legal definition rules. So doesn't matter what you've told anyone. You could have told someone all day long washer and dryer wasn't included in the contract, but if they check the boxes, included in the sale, but if they check the boxes, they're getting them. Same thing. Oh, we're taking the chandelier unless it's included under exceptions. down in 8C, that's not the case. It needs to be clear and in writing. So when in doubt, does it hurt you to include information that you don't need in the contract? No, it does not. Just make it clear. Just write it out for everyone. Okay. Leased or liened items. Okay, so sometimes there's something on a home that a seller doesn't own, most common being solar panels. Okay, so if that's the case, the buyer needs to review the lease and see if they're willing to accept the terms of the solar panel lease agreement. It also causes some delays and stuff needs to be recorded with title. But that can be pretty much anything. So one of the things you want to ask a seller if you're the listing agent is, do you have any leased or liened items on your home? Okay. And then you're going to need to get a copy of a contract of that. Items excluded from sale is exactly what it sounds like. So, you know, buyer may say, no, I don't want that big ugly light fixture in whatever room. They need to take that. I don't want to have to pay to take that. And that's fine. Probably hurts the seller's feelings a little bit. So I might, as the agent, offer to pay for someone to remove that for them, so as not to set, you know, a bad feeling. All right. I think that example I gave you for the free-form document was related to this, is that brackets attached to walls, floors, or ceilings for any such component will either remain with the property or be removed, and holes or other damage shall be repaired but not painted. I don't like either one of those options. I want all of it. I want them removed, patched, and painted. But is that a deal breaker for me? No. So I'll generally assess the property. You know, does it have a hard to match color? Does it have a custom paint job? I don't know. Come here.
Kristen?
Yes.
Hi, I have to jump off for another meeting, but I'll finish the recording.
Oh.
Bye.
Okay. Actually, do you want to order lunch? Just order me whatever. Stop. I'm teaching class. Will you hand me my purse? I'll give you my credit card. Yeah, I'm teaching class. Just hand me my purse, and then I can finish. Here. Will you also order me whatever salad you get? Salad, blue cheese. Done. Bimo, no. Oh, you're so vicious. Okay. Sorry about that, guys. All right, so we were under items excluded and then the walls. Okay, now we're under closing and possession, unless anyone has any questions about this section.
No?
Okay. So closing and possession, buyer either intends or does not intend to occupy the property as the buyer's primary residence. So even if you know if the buyer is not going to live there, lenders require a larger down payment and a higher interest rate, generally speaking, if they're not purchasing a property as their primary residence. So just because you know they're not doesn't mean they're actually telling the lender that. So you want to make sure that you are filling out the contract the way that they want you to. So how do I avoid lying or loan fraud? Is I say, hey, do you want me to fill out the contract as if you intend to purchase this as your primary residence, or do you want me to indicate that this is an income property or vacation home? Okay, what do you want me to indicate? Seller occupied or vacant property. All right, so the way our contract is written says that on the day of closing, possession shall be delivered to the buyer at 6 p.m. Doesn't matter if it records any sooner. I mean, obviously, if everyone's okay with it and the seller's out of the property, you can go ahead and give keys to the buyer or buyer's agent. But if the seller says no, well, technically, per our contract, they don't have the right to possession until 6 p.m. on the day of close, unless you write something different in here. Sometimes you might actually do what's called the delayed delivery and possession, and you can check this box for no later than blank calendar days after the close of escrow. So there's something called a lease back in escrow, which is a very vague term, and it encompasses a delayed delivery and possession, seller to remain in possession, and a residential lease after sale. And there are different documents for it. So if this is going to be a couple of days and there is no money asked of the seller by the buyer in exchange for the time in the property after close, we can use this section. If it's going to be under 30 days, you'll use car form SIP. So under 30 days, SIP. Over 30 days, RLAS, residential lease after sale. There's a big difference here. An SIP is for something under 30 days. Under 30 days, there's no tenant-landlord relationship. Our California state law says anything 30 plus days automatically creates a legal tenancy relationship. So if I can keep a lease back under 30 days, I want to and like to. Why? Because a lease with a real tenant means if the seller refused to leave, you might have to go through eviction. Does this happen very often? No, very, very rarely. So it's not something you have to be super afraid of, but theoretically, if I kept it under 30 days, the buyer could literally have the police out and have the seller removed for trespassing, as they are not a tenant. Sometimes a buyer buys a property that a tenant is living in. If there's a valid lease, the buyer has to assume the lease, or the seller has to arrange to have the lease broken with the tenant to deliver the property vacant. If the property is going to be vacant, I generally say, or the tenant is going to be asked to leave and the property is going to be vacant. The contract says it should be vacant for at least 5 days prior to close of escrow. I like at least 15, because a lot of tenants don't get out when they say they're going to. 5 days before the close of escrow might interfere with funding and loan document signing and all of that. You don't want to go through all of that just for the tenant not to leave on time. If the tenant's going to stay in the property because they have a valid lease, you'll check this box for car form TIP, which basically is a verification of the tenancy terms, the lease terms, basically. All right, all of section 10 is about disclosures and cancellation rights. So you should read through that, but we're not going to go through it. Section F, condominium plan unit development. The seller literally has a contingency timeframe disclosure protection to disclose to the buyer whether or not the property is a condo or planned unit development. If you don't know before you write the offer, you're a really bad agent. So this contingency is pretty worthless. 11 and 12 go over how a buyer conducts investigation, which is called the physical inspection contingency. 13, title investing. You should read through it again. Section 14 is the last contingency we write into our contract. Two contingencies, one is a seller, one is a buyer. Arguably beyond the financial terms, the most important part of the contract. Oftentimes the sticking point for cancellation. So the seller contingency is first, and this is the seller disclosure contingency. The way our contract is written is 7 days. I actually like it to be a little bit shorter. Why? Because I like my buyer to have the seller disclosures before we do buyer inspections. And that is because if there's anything disclosed by the seller that is troublesome or worrisome, I would like the buyer's inspector to look at it.
So how many days do you usually put there?
Hi. I usually put 2. Oh my God. I usually put 2, and that's usually because I'm trying to shorten 14B. So 14B, the industry standard is typically for a condo 10 days-ish, 10-ish days, and for a single family 10 to 14. Yeah, 17 maybe for an estate, but not in a seller's market are we really doing 17 unless it's a huge estate home.
So if you have seller like 2 days, what would your be? How many?
It depends on the type of property, anywhere between 10 and 17.
17, okay.
If I really needed to on a condo, I might be able to do 7 days. The problem is if you do inspections and there are problems, the inspectors might say, now you need specialist inspections, and you need enough time to have your second round of inspections if it's recommended by your first round of inspectors.
So what would be the safest one? Like 10 days?
Yeah, I'd probably do 10 for a condo. because I'm trying to balance being safe with being competitive.
Mm-hmm.
10 for a condo, 10 to 14 for a single family, depending on, is there a pool? Like, is there a hillside? What's there and what type of property there is. I do teach a whole class on inspection negotiations. So you can watch that class on YouTube, or we can talk more about it for during that class.
Oh, awesome. Thank you so much. Thank you.
You're welcome. Sorry. Access to property. Even if you have a 10-day physical inspection, I just want you guys to see that our contract says, unless it's changed, that the buyer has 17 days to access the property. Okay, removal of contingencies with offer. I teach a whole class on contingency-free offers. That includes individual contingencies. Don't recommend removing contingencies with offer unless you're consulting with a pretty experienced agent who can help guide you through that. Seller right to cancel. So I just want you guys to know, a seller really doesn't have a right to cancel unless a buyer fails to perform. All right, so if a buyer fails to perform, not only does the seller, only have cancellation right in that instance, but they have to serve the buyer with something called notice to perform. And they have to serve it 2 days before they can try to cancel. Anyone trying to cancel, just so you know, all escrows need to have mutually signed escrow cancellation instructions sent to escrow and mutually agreed to instructions on what to do with the deposit, whether or not it's right or legal. If it's not, it can go to mediation, arbitration, or eventually court, depending upon what's in the contract and what the situation is. Most sellers do allow buyers to cancel and give them their deposit back if they have contingencies in place. So I don't want you to be worried about that, but I do want you to know, I've heard many new agents explain to buyers, oh no, if you cancel, you get all your money back if you have a contingency. That is not necessarily the case. They will eventually get their money back. It's just, how hard would it be? But like I said, a seller can't sell until they cancel an escrow and give money back. So a seller has motivation to allow a buyer that can illegally cancel to cancel and give all of their money back. They have no legal right to their money if there's any contingency protection anyhow. Let's see. Final verification of condition. This is the final walkthrough. Hey, final walkthrough. Basically, it's a feel good for your buyer, but at the end of the transaction, at least within 5 days prior to close, you're going to go to the property with the buyer and make sure that any agreed upon repairs are done there and that the property is in the same condition as when the buyer made the offer. You're going to use a car form verification of property condition called VP. Okay. Let's see. We talked about if the buyer or seller is an entity that's representative capacity. Okay. And Section 21 is mediation and arbitration agreements. I don't know anything about this and I never want to. I'm thankful for that. If you ever have any questions about arbitration, mediation, liquidated damages agreements, I would immediately go to Michael Rosales. It's probably something for our legal team to help advise you on. And if any of your clients or you are actually dealing with the active process of any of these, you're definitely going to be going to Michael Rosales and he's going to turn you over to our legal representatives. Okay, selection of service providers and everything down. These are just definitions, so definitely read through them, but nothing for us to discuss here. You do need to know what they mean. All right, 31, expiration of offer. One of the biggest mistakes I see in the contract, or common mistakes, I should say. Common mistakes is this line is left blank. As an agent, your name should be in here. And then as our contract is written, a buyer offer expires on the 3rd day after it is signed by the buyer. Okay, unless you check this box and modify the date and and date. And then when we're talking about if a buyer wanted to make the offer in the name of an entity, this is where you would check the box for that representative capacity signature disclosure agreement.
Well, that's interesting. Is anybody there?
I think she might have cut off.
I guess she's.
Yeah, I think so.
I
She's
thought
very
the
good,
same
though, right?
thing. I thought maybe she was just looking for something and it cut off.
Very quiet. I wonder if she's coming back. I wonder if she can. I guess
Her little dog probably bit the cord and shut the computer down.
Huh.
I think she will because she's in the office right now. So somebody,
She's usually good about that stuff, so I think she will.
yeah. I think she's just looking for help right now.
Should we just call it a day then? Pretty
Give her a few more minutes because she was almost done with this, and I don't think she would want to just leave us hanging like that.
Okay, cool. I'll wait around 2 then.
I tried calling Alfredo, and then I tried Kristen right now, and I'm not getting through. It's so I don't know if anybody else wants to try.
I don't have anybody's number, but it looks like a lot of people left. So
I don't know, guys. What do you guys think? Whoever's left on here.
well, there was 20 people and other 6.
Okay. I think we should just call it a night then.
Yeah. All right. Bye, everyone.
Bye, everyone.